Most investors lose money in the stock market, not because of bad luck, but because they never actually research the stock they are buying. I know that there's a place for upside and downside in the stock market, but losing entirely is to be questioned because you don't really need to invest in every stock. Many people invest based on news headlines, forgetting that these news headlines can bring about fear, it can bring about doubt, making you to sell during market dips, and this can make you to lose out in potential recoveries when the market stabilizes. Some people also invest based on, hot tips here and there, but successful investors treat stocks like business. Of course, your hard-earned money is involved, and anything worth doing is worth doing well. So today, I thought it would be interesting to walk you through the exact step you can follow to research a stock before even investing. And if you watch this video to the end, you will know how to know a stock that is overhyped and the one that is actually worth owning. So let's dive in. The very first step, which is also the most overlooked, is understanding the business of the company you are about to invest in their stock. Before you even look at the charts, before you look at the ratios, before you look at the MER, management expense ratio, no matter how enticing it is, you need to ask yourself, what does this company actually do? How do they make money? Because you're about to own a tiny piece of that company, because that is what stock market investing is. Once you buy the stock of that company, you have owned a tiny piece of that company. So you need to ask these questions. Ask, who are their customers and what problem does it actually solve in the world? Of course, you know that the more problem you solve, or should I say the better problem you solve, the more money you make. So all these questions, the answers can be found in the company's website, right under their About section, or Investor Relations. Investor Relations is a department of a company that is devoted to handling inquiries from shareholders and investors, and also people that might be interested in buying the company's stock. So you can ask any question and get the answers. An investor relation is mostly managed by the public relation of most companies. Now, when you get all these answers and you cannot explain in 1 or 2 sentences how this company makes money, then you shouldn't be buying the stock. Because if they don't make money, capital gains is not possible. And if it's a dividend stock, how do they pay their dividends? Warren Buffett, who is a legend in investing, always says, never you invest in a business you don't understand. Because when things get shaky, of course, that time will definitely come. Your conviction will disappear if you never really understood what you invested in. This is absolutely true. And this first step of understanding the business you're about to invest in their stock will save you from panic selling when the market dips and losing your money. Because that's how investing is. When the market dips, if you sell, you lose your money. But if you keep it for a long time, when the market stabilizes, you will gain. Now, once you understand the business model of the company, next step is for you to study the company's financials, because numbers tells the story. Just head over to the company's investor relations page, or you can use free platforms like Yahoo Finance, Morningstar, or simply Wall Street, and check for key financials like revenue growth. That is how the company's sales have consistently grown over the years. Also check their earning growth. That is, are the profits they are making growing or declining? You might as well look for their debt level. That is how much debt the company owes. Every company owes debt, that's for sure. But the difference is that solid companies manages their debt wisely. Also check their cash flow. That is how money flows in and out of the company. Check if the company is generating more cash than they are spending. And if yes, that's a huge green flag, because it shows that the company is actually managing their company well. Please don't get scared looking at those financial statements. It can be really intimidating. And please don't worry, you're not trying to become an accountant. You are just looking for those things I mentioned. And if the numbers of those financials are increasing, that means the management of the company is actually doing something right. But if the numbers are flat or declining, you can either don't buy the stock or even dig deeper before buying. As for me, I don't think I have that patience. Now, the next step is for you to analyze the unique advantage that the company has over their competitors. This is called moat in investing, and it was popularized by Warren Buffett, the legendary investor. This unique advantage helps companies to, maintain their market position by preventing competitors from replicating their business models easily. Because if that happens, the company's revenue growth will decline, even their profit margins. So, as a potential investor, you need to seek for those companies that has a strong unique advantage. Examples of this unique advantage is cost advantage. Companies like Walmart sell their products at lower costs by leveraging the economies of scale. Economies of scale simply means that Walmart produces high quantity of products and bulk purchasing, and this reduces the cost of their products, thereby helping them keep prices low. Another unique advantage is strong brand name. Companies like Apple, Coca-Cola, Nike, they have strong brand names, which is so hard for competitors to replicate. So the stronger the unique advantage of a company is, the safer your investments tend to be over time. A company with no unique advantage, might seem profitable now, but in the future, it might crumble when competition increases. Next step is to look beyond the company and study the industry it operates in, because even a great company can struggle in a dying industry. For example, if you're researching Tesla, you will look at not just Tesla cars, but the entire electric vehicle industry. Ask yourself, is the industry growing or fading away? Because understanding the big picture helps you to invest in where the world is going, not where the world has been. Now, at this point now, I'm assuming that you've understood all I've mentioned, and now it's time for you to ask yourself if the stock is actually what the price is selling at. Because a good company can still be a bad investment if you overpay for it. So for you to determine the value of a stock, you can check the assets of the company, check their earning potentials, check their growth prospects, and the overall market condition of the company. Because the truth is that sometimes the price of a stock can be influenced by, reactions from news headlines or even sentiments from investors. All this can lead to a stock being overpriced or overvalued. Now, at this point, when you're done, checking the value of the stock, before you hit buy, do a quick scan. Check if the company is involved in any lawsuits or scandals. Check if the insiders, like the executives, if they are selling a large amount of their own shares. Also, check if more shares have been issued, because this reduces the value for existing investors. And you can get all this information by checking news headlines, and this can only take you about 5 minutes. And when you do this, it can save you from massive loss. Okay, after all this research, you should be able to explain why you believe in the company and what you think should grow the company. Example, you can say, I'm investing in Apple not because everybody is investing in Apple, but because it has a loyal customer base. Of course, Apple has a loyal customer base. Just check out when Apple just bring out iPhone 17, what happened? The line was massive. You can also say you are investing in Apple because they have strong cash flow and continuous innovations in services. So you are not investing based on hype, but based on conviction. So that's how you research a stock before you invest, step by step. So it is something you can actually do. So next time when someone tells you about a stock, don't just take their word for it. Use these steps to, research before investing. If you watched this video to this point, thank you so much. And if you found this video helpful, please help me to hit that like button and also subscribe if you haven't subscribed. It is absolutely free. Thank you all so much for watching my video, and I will see you next time. Bye.